Hey, what's up, team? I wanted to take some time and discuss our Amazon trade that was called out in chat today, talk about why it was on the watch list and why it was a good stock to trade. So, starting on the daily chart time frame, which is where we usually will start our analysis, Amazon, we know has had a negative catalyst recently, being the earnings report. That is what caused this initial gap down. So since that earnings report, Amazon formed a little bit of a bear flag here and then broke down yesterday with the rest of the market as everything else was coming down. What I noticed on Amazon is that yesterday's support point was formed right here. Yesterday's low of day was formed right here at this level, $2,300. All right, $2,300. So whole numbers are often levels of support and resistance, natural levels of support and resistance within the market. We see that the support was held here yesterday, and then this morning that same exact level acted as a point of resistance. So going into the Discord server, if we go up to the watch list, the day trade watch list, that is the exact reason why Amazon was a short below 2,300, because it was a whole number trade. So looking at the price action of Amazon, I'm going to just flip this to the 1 minute time frame. Looking at the price action of Amazon, it opened up, went a little green, and then red, right? And we don't trade during those first 5 minutes anyways, so no trade really should have been taken during this time. And you're looking at this, you may go, okay, well, it's down pretty far below the trigger level already. I don't want to chase this move down, and that is the exact mentality you should have. If you feel like you've missed the drop, which at this point you should have felt like that, if you feel like you've ever missed the drop, chances are that you probably have. So you never want to chase the move down. And instead, what you want to do is look for dips if the stock is running, or look for rallies if the stock is coming down. So this is our first rally on Amazon following this an opening flush down, and look at where the stock rejected. Right at $2,300. Okay, this timestamp is at it's at 6:42. Let's just focus on the 42-minute mark. Don't worry about the 6 because I have different time zones set on Discord and on Thinkorswim. But the 42-minute mark is important. So in the alert room today, I give you this this trade idea, right? Amazon. Look for the $2,300 reject for a short. And I give you the contracts. Amazon 2290 puts. That was at the 42-minute mark. Right at the exact moment that Amazon was testing 2,300. Good place to take a short entry because it offers you a low risk play with the potential for a high reward. And what I mean by that is if you're going short right here, just below 2,300, your stop loss is going to be just above 2,300. You know, maybe you want to give this a little room to work, but your stop loss is very minimal. It's defined, right? So your profit target there then becomes the low of day, because we know also that low of day is always going to be a potential point of support or resistance. Same with high of day. Right, so you're risking, basically, if you're taking the short entry at the trigger level, you're risking, what, 0.1% with the potential to make 1.45%. And if you're trading options, well, we know that those contracts can run pretty heavily. So I'm going to pull down the options chain here for those exact puts, all right? Amazon at the 42-minute mark, 6:42, was those puts that I shared, the 2290 puts were trading right at around, lows of 25.5. If you got in midway through the candle, 27.5. And when they ran, as Amazon was running back down towards the low of day, let's just go with the 52-minute mark. So it would have been a 10-minute trade. When they ran at the 52-minute mark, those contracts were then worth $42.86. So from 27 to 42. Had you just bought one contract, you would have made $1,000. So percentage-wise, the percentage gain You're looking at about 57%, 60% on that trade. And then look again. This gave you another opportunity rejection for a rejection right off of 2,300, right? It's just a rinse and repeat. Take the short with a stop loss just above and look to sell into the strength. This isn't the only stock that this worked on today. Let's look at SPY, for example. SPY was a short idea this morning. Let me give you the watch list. So we're going to go to the day trade watch list. SPY was a short idea below 409, right? Just keeping this on watch for direction. So we're going to draw a trend line at 409. That's going to be your trigger level. Again, the stock opens up, goes red, 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 red. We're not trading in the first 5 minutes, so that doesn't count. Maybe you could have taken the short entry on the flush below here. That would have been fine. But the better entry would have been on the rally rejection at 409. So you got your drop down, your rally, perfect rejection of 409 right off of the watch list for the move down into the low of day. And then yet again, you get another test of 409 for the rejection and the move down, and you just sell into strength. So trading doesn't have to be overly complicated. You just need to have a plan, have a strategy, follow the plan, follow the strategy, execute with discipline. You know, don't be, if you hesitate on this type of entry, you're going to miss that opportunity. And the adage goes, scared money doesn't make money, right? So I like making these videos because maybe it helps instill some confidence in you for these watch lists, for these trigger levels. What you should be doing if you are missing these trades, what you should be doing every single day is going through my watch list, going through my watch list results maybe, looking at all the different trigger levels that I set, and then ask yourself, how could I have taken an entry on this trade based off of the trigger levels that were put out on the watch list? And then make sure that you're following those watch list trading rules. Because if you apply those rules, you may find that a stock doesn't necessarily need to break a trigger level for you to take an entry. Let's look at AMD, for example. AMD was a long idea over 95 today off the watch list, right? But then we get this rejection at 95. That right there is your telltale sign that 95 is not going to be broken, at least not in the early morning session. So maybe we can consider taking this short off of the rejection at 95, maybe around 94 somewhere, or maybe as it's breaking the previous day's close, right? Taking this short from the rejection of 95 for the move down even lower. So practice this stuff. I really want you to burn that midnight oil, put in the time, because if you can master this system, you won't need anybody else's confirmation when it comes to taking trades. Everything else is already given to you. You're given the watch list, you're given the trigger levels, you're given the stocks, you're given the training. All you need to do is learn it and apply it. All right, I hope the video's helped you out. Press the like button for me if it has. Thank you for watching. Thank you for your time. Take care. Have a great weekend, and I will see you all in chat. Later.